I've got some very important information to get into today. The first thing I want to look at is the ultra valuations. Things are off the charts. The second thing I want to look at are the anomalies that are in the system. These anomalies are not what you're going to get in the mainstream media. We know that. That's why you're here. And the third thing I want to look at is the economic mistakes. Mistakes are all over the place today, and I'll give you the information you need to know. You need to stay tuned because this is going to affect your portfolio, this is going to affect your assets, and this is going to affect your livelihood. So let's go. I'm going to start the video off by showing you some charts, some indicators, and I wanted to explain the fact that no matter how many different indicators show us that things are crazy, things are overvalued, it does not mean that it's going to turn around the next day and crash. We need to understand this. What it shows us is the current economic climate, okay? That's what you need to know, okay? You need to know this information and then you make your judgments based on it. Not simply saying, well, I don't need to worry, I don't need to care, fundamentals are thrown out, technical analysis is not good, I'm simply just gonna go pedal to the metal, and that's that. That's not a wise thing to do. You should have all the information in front of you and make the right choice, which is a choice that you personally believe. Looking at this chart right now, at the top, you're seeing the S&P 500, which is the black line, and below that is a moving average. This is not the 50-day moving average, but instead we're looking at the 50-month moving average because this chart goes back from the 1970s up until today. And when you see the price rocketing way too high, way too fast, generally it comes down. Okay, it doesn't mean it comes down by 1% or 2% or 20% or 50%. It simply means that it's overdue for some sort of correction. But like I said, we don't know what's going to happen tomorrow. So there have been times in history where this has really moved up excessively in a short period of time. And at the bottom, by the way, you're seeing the PPO. This is a different indicator. It's an oscillator. It's the percentage price oscillator to be specific. All you need to know, forget about the mumbo jumbo. In these previous instances, 1987, leading up into the dot-com boom as well. And today, guess what? We're seeing this overvaluation based on this particular indicator. Moving averages do tell us a lot, okay? So you could see, you know what happened in 1987, you know what happened during the dot-com, and now today, big question, okay? We'll see. Many people somehow believe that because there are new technologies, because the Federal Reserve is there, because whatever, that there's no possible way that the markets can come down. And I think that we need to understand that in 1987, there were very, very few people saying, oh, the market's going to come down. In 1999, there were very few people saying the market's going to come down. In 2007, same situation. Okay, you're not going to hear from many people telling you that in advance. We only know after it comes. Does that mean that you don't invest? No, you do what you think is best. Look at the Philadelphia Fed Manufacturing Index. This has started to decline. Okay, you're seeing that. You're seeing it all over the place. It's affecting people. It's affecting businesses. There are many different factors here. There's shipping, you got a clog happening, you've got, I think I have that particular article to show you in a second. But anyway, look at the jobless claims. These are now down. Hey, economy is great, right? Well, we'll see. Then we have this. This is the commodities index, which I can actually show you here better. I found something very interesting. Okay, so we're looking at this particular commodities index. And I wanted to give you a little bit of insight as to what's happening. Okay, so the chart starts in the end of April, okay? And what I'm noticing here, which by the way, there are always ups and downs, and you look at a particular indicator for commodities being lumber, look, 1700 to now under 500, wow, huge change. But let's look at the index as a whole. And you could see we are getting higher highs and also higher lows. Do you see that? Okay, that happened multiple times in a row over the last few months. This is bullish. The pattern is moving up, but something happened. So after this peak right here on July 30th, we then get a dip down, which we had multiple times. And now it didn't get to where it was previously. Okay, so instead of on this particular commodities index, it was at 221, so it had to go above 221 for this pattern to continue, but it only got to 216, okay? And you look, it got really weak. It started to top out right here on August 13th and has since come down. So if this breaks below this line right here, which is 205, and I'll give you an update on that, then we have a problem with commodities. That signals definite bearishness in the economy as a whole if that starts to come down, because a lot of times the price action is going to tell a story before we get it in the news, because you know how slow the news can be. This is part of what I wanted to talk about at the beginning. The S&P 500 hasn't fallen by at least 5% in nearly 200 sessions. This is coming out of Market Watch, and you can see the date, August 19th. Don't you remember, what was it, maybe 5 days ago? I literally brought that to you in a different video. The mainstream media is slow, okay? I'm bringing it to you way before the mainstream knows about it, okay? By the time they write the article, it's approved by 6 bosses. Come on, too slow. Cathie Wood says that stocks are not in a bubble, thinks investors betting against her fund are off base. Talking about Michael Burry and so on. Quote, I don't think we're in a bubble, which is what I think many bears think we are in a bubble. And I remember the late 90s, our strategies would have been cheered on. You remember the leapfrogging of analysts making estimate one higher after the other, price targets one higher after the other. We have nothing like that right now. In fact, you see a lot of IPOs or SPACs coming out and falling to earth. We couldn't be further away from a bubble. That's what she says. So when I look at quotes like this and when I look at the comparisons, is it 1999? Is it the year 2000 right now? Is it the financial crisis? Is it 2007, 2008? Is it 1987? Is it 1929? Is it the 1970s? Let me explain that it is 2021 as of this recording. It's none of those previous times, but it has elements of all of them. So don't try and use that and say, oh, you know what, this time around is different and that, so on. That's silly. You have to understand somebody like this can never, ever say that there's a bubble. Even if it was the tulip mania, and we're talking about right at the peak, she wouldn't say that it's a bubble if she's invested, if her whole company, her whole livelihood is surrounding that. You're never going to hear it. You don't even see Warren Buffett's actions and his words. Look at this. His words. Never bet against America. Oh, the economy's so fantastic. Stock valuations are all good. But I'm going to sit on $144 billion of cash. I'm not going to make any major acquisitions because, well, everything's fantastic. Come on. Let's not take their words. Let's take their actions. And Cathie Wood's company here is clearly going headfirst into it. They're putting their money where their mouth is. Just like Michael Burry, putting his money where his mouth is, even though he doesn't talk very much. So we'll see what happens in the end. But the point is, you can't trust these individuals. You got to see what they're doing and you make the decision for yourself. Nobody is right or wrong until the time passes. Till the time passes. And then this right here, it's just an article before we get into the Money GPS insights, talking about commodities, talking about what has been happening. Okay, commodity markets shown their signs of wariness with oil and copper prices retreating. Those are two big ones for the economy, of course, as a whole. There's liquidity. I love this. I love this. There's liquidity sitting outside the market that would like to get in and wants to get in on the pullbacks, but there haven't been many opportunities. I showed you the amount of cash that investors have. It's historically very normal. Cash, money markets, okay? You need to have cash in the money markets if you're a big investor. If you're a big investment company, you're always going to have cash on the sidelines. It's not what it is. It's that you always want to have some liquid available to you. But that's, of course, not how they see it. Now, there are more things in here that I really wanted to get to, but I know I'm going on long. For example, they're talking about the tech stocks in China, which are definitely taking a hit, whether that's Alibaba, and they mention a few others in here, and just saying that they believe that the best of the growth has passed us, at least in the Chinese tech sector. Okay, so we'll see what happens. And then we have this article here out of the Money GPS Times. Shocking study reveals, and this is by Janet von Yellensby, and she says this. Study finds that people feel better about themselves if they smash the like button on this video. 99% of respondents were happier and received lots of Fed helicopter money as a result. Many people don't hit the like button and instead go off into a sad and depressing day. But with this new study, it seems that it's obvious how to resolve it. Smash that like button. Thank you very much. So let's break down what we have today. Number one, some people, some investors, some companies believe that we are at the beginning of a bull market. On the other hand, you're seeing some that are saying they're full of bull. But in truth, neither of them should be listened to and believed. We should make the decisions for ourselves. We should get rid of the emotions. Don't be chasing anything. Oh, there's going to be this fantastic thing, the gold at the end of the rainbow. Or maybe it's going to be the end of the world as we know it. We cannot necessarily put all of our faith into one thing or the other. We just need to take action every single day. Let's take a look at some of these right here. Landlords from Florida to California are jacking up rents at a record speed. This is so different than what we saw a year and a half ago. California congestion nears new high. East Coast gridlock worsens. Take a look at this. This is just an example, but it looks much worse in the data. I don't know if they have it in this one. Yes, you can see right here. Take a look at this. Marine traffic. You can go to that website. I've talked about it many times before. Maybe if I move it like this, just see all of these different vessels that are here waiting to get in. Who knows? Let's see what happens. Chip crisis threatens to cut auto output by 7 million cars. They keep talking about this. I think this is obviously a big issue. I don't know how we went from 2019 having millions and millions and millions of extra cars sitting around in parking lots, sitting on boats, to now we have literally a shortfall of 7 million cars. Things are weird. Things don't make sense. I don't have anything other than anecdotal evidence about that. Anyway, Amazon plans to open large retail locations akin to department stores. So as you may know, Amazon has their own brand called Amazon Basics. They have Amazon Fashion. They have a lot of different products that could be sold in physical stores. I think on the surface level, it's very weird because then they're paying for the physical locations. And I could tell you specifically that Amazon does not like to be a warehouse, which is really what a department store is. They're a warehouse. They have stuff and you go in there and you pick it off the shelf and you buy it. This could be part of a different model. Maybe it's to do something with their Whole Foods. Maybe, who knows? It's all speculation at this point. I don't exactly know what's going on, but I'm just bringing the news to you. And as it evolves, I will be giving that to you, and any relevant information. I'm going to end it there, but I wanted you to know that if you're not already, I mean, why wouldn't you be? But you got to be on the insiders. It's really good because it's going to be able to get to you and I directly. We're going to go around the censorship and we're going to bring this channel up to new heights. Okay, you can get that at the card up here or at themoneygps.com. If that article by Janet Von Yellensby didn't already convince you, you got to hit that like button. I appreciate it. And if you haven't seen this video already, you got to check it out. Click it, and I'll see you there.